Hi, everyone, and welcome to Trades of the Week with myself and no other than Keith Sullivan. So today we have a lot to go through as usual, so I do want to dive straight into it. And I mean, there's so much happening in the market. And let's start with the trading and the buffaloes we have been in or are in. So the first one is the KRC Kilroy reality. We're still in a little bit of a loss here, but with the market being bearish, maybe it will start to really head lower. And looking at the other ones here, HII really shot up, right? This could have been a great breakout trade, Keith. That's another strategy that we do use. But that being said, this is no trade because we always entering with a stop order just to make sure it's moving in our direction so we don't get unnecessary losses. So this is let's scratch this one. Let's cancel this order if you still have it on. And the same goes for McDonald's. We also placed a trade on this small candle 28th of Feb, if I'm not mistaken there. I actually entered a bit earlier on this, on 24th or 25th, sorry. So I actually got stopped out. But I think if you looked at this on the 28th, then you should have no trade here as well because it just carried on lower. So this is another one to just cancel the trade on. So those are the three that we're in at the moment. And in a moment, we're going to go through the new opportunities that we're looking at. But the question, of course, is what is happening in the market, Keith? Will it carry on going down?
Of course. So in regards to the market, the first thing I want to touch on is McDonald's. So with McDonald's, we see that the stock did break our level of support. But what does that mean? It means we can now look at this as more of an investment. So FCA, because fundamentally it is pretty strong. It's down around 17%. And we can place our limits at the 20 and 30% drops. So I think even though it did break the support level and we didn't have a trade, okay, it's not great for the Buffalo side for us personally, but we got a FCA position, which could be really, really good. Now, that being said, let's have a look at what is happening currently in the market. So once again, the big piece of news which is affecting the market and its volatility is all down to the Russia-Ukraine conflict. And it's just a cycle that seems to happen, right? Before the conflict was starting, there was uncertainty. So there's a lot more volatility, bullish, bearish, because people didn't know what was actually happening. When the invasion was confirmed, the volatility kind of slowed down a little bit because they knew, okay, now there is an invasion that's actually happened. Let's look at what could potentially happen to us and our economy. So the investors took a step back and they're really looking at what is it that they could potentially be doing. But now that the conflict is increasing in intensity, we are also seeing volatility increasing as well. We're seeing wild swings in the VIX, which is the volatility index. And with that, it's just because there's more uncertainty that's happening. Again, there's sanctions that is happening to Russia. How is that going to affect the UK? How is it going to affect America? No one really knows. And this uncertainty is what's causing the market to really fluctuate. Now, when there is a negative, we always look at the positive, right? And yes, there is more money being taken out of equities, so out of stocks. So we're seeing more fear, the market being bearish, but we're also seeing the positive side on our commodities. So investors are going back to their safe haven, which is the commodity sector. And we're seeing oil making all-time highs. We're seeing gold really, really rallying. We're seeing silver rallying as well. So this is US oil on the chart. And we can see during COVID, when COVID happened, we saw oil take a massive tankering, okay? It took a massive hit, as you can see here. And since that, we've just been seeing a nice steady recovery. But when the invasions actually happened, we've now seen a big increase in oil prices. This comes down to really the supply and demand side. Supply is becoming a bit lower because of what's happening in Russia. So there's no supply coming from that side. So demand is naturally getting higher, causing price to go higher. So if you are in oil, great for you. It's time to look at maybe putting in a stop loss to locking in some profits. If you're in gold and silver, once again, amazing opportunities because they are also rallying. As you can see here, gold recently broke out of a downward trend that it was currently being stuck in over the last few months. And this is now going to look to target around the 2000 mark. So the previous all-time high. Now, the last bit of news that has come out is, I know we keep talking about it, but it's inflation, it's the interest rates, and the Fed are basically looking at a 25-point rate hike, okay, which means interest could actually increase quicker than expected. Now, what does that mean? It might be forcing people to actually go and save money and not invest it. So the economy will start to shrink, and we can also see a bit more of a bearish move in our major indices, your US 100s, US 30s, and the S&P 500s. So if you have a look, Dennis, quickly at the Fear and Greed Index, we can actually see that a lot more investors right now are more fearful. Okay, so it is that extreme fear. We're seeing that in this case, 41% at the end of last week were bearish. So the bearish investors are taking their money out, and it is causing that fluctuation into the market. So once again, it is an opportunity for us to accumulate our shares, so buying as that market falls, and it's also good for looking at short positions. Just remember, we need to be hedged against the market because the volatility, we're seeing bullish swings, bearish swings. So we don't really know which way the market's going to go because we don't have that crystal ball. So make sure you are hedged against the market. And we're going to show you a couple of opportunities next, which are both long and short. So Dennis, anything else to add on that?
No, exactly. And I couldn't say it better myself, Keith. I think that's awesome that, we just need to be hedged with the Buffalo, of course. The fundamentals doesn't really matter. We will always have some winners, some losers, but we always have the 1% stop loss rule. So we're never risking more than 1% of our entire account. So if we go to the new ones here, we have the first one, which is OCFC. That's orangutan, clementine, France, and clementine again. I think that's the phonetic alphabet for those. And not only that, right, we can see here that we do have a red candle. So I do want to wait for a green candle before entering. So currently the reward risk ratio is not great. And I do think, though, that we do have a potential of it heading up to a 1 to 3 risk-reward ratio. But I would like to see a green, nice, smaller candle that would really make my day a lot better, I would say. So I'm not going to enter before that, but that's why we have a stop order as well. The next one is PRU, P-R-U. And the same here, we do have a big red candle here, which is not amazing. So we would like to see a green candle. However, we do have the rule here, no candles closing below on the previous bounces. So that's exactly what we're seeing as well here. So let's hope we get that reversal, because then this would look like a good opportunity, I would say, as well. And of course, we do want to be hedged. We are adding a short one as well. This is Aclaris Therapeutics, ACRS. And currently, we have a green candle. Would like to see a red candle in the best case scenario. I like that the past earnings were negative. They missed targets, which not by a lot though, but they are, not making revenue, which is good, right? Because that states for a further downside potentially. But it is a bit special with these therapeutic companies, because if they come out with like a successful drug or something, then it can shoot up out of nowhere. So just be aware of that. But if it continues the trend, we might have some more downside, and we have a good reward risk ratio on this one as well. So that is really it for the stock side of things. And just like Keith said, this is the importance of being hedged. And you will see in the VCA portfolio that we are in gold. We have been in silver. We have now locked in profits there as well. And I think it's going to turn out really great. So and this is amazing. This is how it should be, right? When a lot of asset classes are going down, like we're seeing cryptos going down, we're seeing tech stocks going down. But then oil companies, gold and silver companies are actually going up. So they actually do work as a hedge, and then we can make profits on some while others are going down. So that being said, let's jump over into cryptos. Speaking about safe havens, they haven't been as safe havens lately, but let's see how that plays out. But by the way, before that, please comment below. Have you had any success with the Buffaloes as well? So we're going to show our results a little bit later here. But I would say that we're up quite a bit, right? So make sure you comment below. Are you following these? And obviously some months will be better than others. So let's go over to cryptos here. And there are some things I do want to share with you today with cryptos. And looking at Bitcoin, we're still in an ascending triangle. Even though the market are quite fearful at the moment, extreme fear. we are still positive on the market until we break that 30,000 level support. And what we have found as well, I want to show you something here. Looking at the weekly chart, so every candle is 1 week. I'm going to change this to the logarithmic scale as well. And I'm going to add this indicator. So this is an indicator that shows curve zones basically as well. So really tracks the movement of the price. And what we can see is, historically speaking, going back all the way back to 2011, and there's some pieces missing on the chart here, but we were up here in the red territory once before. And we can see here that Bitcoin has topped out before the bear market in the red zone, and the green zones has been buying the zones for the entirety of the crypto market. And that's how these are shaped as well, to get a good estimation of where prices could go. So currently we are looking at the time now, we are in the green zone. Could it go back lower? Yeah, we see the worst case scenario. It's heading back to the last all-time high if we break the 30,000 mark, which would take it down to the Corona levels if things really goes really bad. So we don't really think that that's going to happen. But if there's some kind of black swan event, which could mean that the war will really, I hope it really does not, of course. So we pray and do everything we can to support the situation there. But if something comes out of the blue, it of course might trigger a bigger fall in the market, like Corona did as well. But until that, right, the chart tells us the truth. And when everyone's fearful, I don't want to be fearful myself. So we are sticking to our guns and the strategies, right? Sticking to the CCA small cap strategy. But the interesting part here is if we then eventually go up to the red zone, where we will start to take some more profits, and of course we follow the strategy until then, that might mean, and take Bitcoin up to 160,000, maybe $180,000 mark. And so this could just be a good estimation for you on when to sell before the next bear market, for example. So I hope you found that valuable. I think that's just a good way of looking at it. So it's in the buy zone. So no, we should not be selling. Maybe you shouldn't buy ferociously, but I think it could be good to absolutely be holding at least, because you never know when the market will change and when the chart will turn up again. And speaking of some crypto news, Keith's favorite, well, I mean, Keith, you have been speaking about XRP for quite some time, right? You're like, it's gonna go up, because it's obviously been a case with the SEC, and now it's looking to be a lot brighter. So of course we are using the strategies we always have. And what's interesting is a lot of the crypto whales, and no, Keith, not the country whales, but but the whales, like the people that have a lot of money. So they have been buying hundreds of millions of dollars worth of XRP over the last couple of weeks, and now being down 50%, I think it's holding up strong. So I think it's well worth an investment, right, with the CCA strategy, if you like. And it needs to break this downward trending resistance before it can then move higher. Same actually with Cardano or ADA. Whales has been accumulating the similar, right? A lot of Cardano or ADA. This is a rival to Ethereum, with the co-founder of Ethereum actually creating Cardano, Charles Hoskins. So, and now being down 74% from the high, I think it's a great time to start getting into that as well. But another piece of news is actually that Luna has actually now climbed up and actually passed, I think, Ethereum even, with the most amount of locked money in the ecosystem. And they have some great staking rewards. I think it's 20% a year. Very simple, easy, and they have an amazing system and blockchain that they've built. So, and that's also reflected in the price. It's going higher. So I hope you guys took the opportunity to invest when it was down, but now it is up quite a bit though. So do wait. I would wait for 20% drop before doing anything else. Is there anything you would add on cryptos besides from all that, Keith?
No. So in regards to crypto itself, I still think we are bullish until that 30,000 level in Bitcoin is broken. The market is still holding itself. Now we've seen it come into this zone 2 times, right? So we've seen it come into the zone, creating all-time high, came back, accumulated buyers, created a new all-time high. So I still feel we are bullish in this way. Now, could it come back into the zone again and try to accumulate more buyers? Potentially. But as long as it holds that 30,000 zone, I would expect to see a push higher. And as Dennis said, if there is a black swan event, then potentially we could see a bit more of a drop. But remember, never be fearful in this. If we are seeing drops in the market, it's time for accumulation. And this is the way that I'm looking at crypto is, okay, yes, my portfolio might be decreasing a tiny bit, but I'm accumulating more coins, okay, or more stronger projects for the future. And that's what crypto is. It's not short-term gains. We are looking at the longer-term gain with cryptocurrency. But I think as we are seeing crypto falling there, Dennis, a lot of countries are now recognizing crypto and even cities as legal tender. So I believe it was a Swiss city, Lugano. I probably said that totally wrong. So if you are Swiss, please don't shoot me. But a Swiss city have now agreed that cryptocurrency itself is legal tender, okay, meaning it could be used to buy and sell within that city. So even though we might be seeing bearish moves in the market, there is so much positive news that's coming out. I see it's very hard for Bitcoin not to make all-time highs, for crypto to have another extension higher. Okay, it might not happen in the next few weeks, but months to years, yes, we're definitely making new all-time highs with this.
Yeah, absolutely. We are super bullish longer term, of course. And we usually say, right, if you have a 3 years or even more time horizon, you will make money over time, right? That's with every strategy. And we've actually said this as well, right? The reason most millionaires are made through properties and real estate is because it's so long time. You cannot act on emotions, right? You can't just sell the property the same day, right? Pressing the button. But with stocks, you can. With cryptos, you can. It's super easy to act on emotions. And I know people that, bought at $20,000 per Bitcoin, sold at $8,000 per Bitcoin because they were so scared. If they would have waited another year, they would have then have been able to sell not for $8,000, but for $60,000 instead, making 3 times their money instead of a 50-60% loss. So that's the power of being patient, right? So right below, are you patient? Comment below if you see this long term. And if you are doing like us, buying, right? I know there will be a time to sow. I'm not so sure if that's the right word. English is my second language, and there will be a time to reap. Is that correct?
Keith? Yeah, something like that. It's something like that.
Something like that. All right, perfect. So now we are really planting and watering the grass, and hopefully then it will grow. So we'll see. Oh, that's exciting. What's happening? Okay, there we go. So now there's not really anything else to look at. We've added another entry on Engine Coin as well. We think this is a great project. So if you missed this last time, then we have looked at Engine Coin to add a first entry around -72. We've been milking the cow before. But besides from that, I think cryptos are looking incredibly exciting. And now I just want to move over to stocks a little bit as well here. So looking at some of the stocks, like we said, right, people are panicking. PayPal being down 70%. Who knew? It's back to the same levels as it were during COVID almost, when we have that big crash, and that's a huge fall, right? But that being said, I think it's a great time to accumulate, as long as you do follow a strategy. If you buy on emotions, hope for the best, buy and pray strategy is terrible. So do make sure you use a solid strategy. We have now put in another entry, and then we will let time do the heavy lifting. AG and PASS are looking healthy. So PASS we added like this would never go up. Like, come on already. It's just been going down. But now, just in a couple of weeks, it's up around 26%, getting us up into a profitable situation because we enter with more money each time. So we do have an average price around this level here. So currently we would be around 10% in profit. So not time yet to take the profits or milk the cow, but we're going to wait a bit longer. The same goes for AG. We entered this 2 times. We do have an average price a bit below the middle since we are entering with a bit more money, and currently up around 10-15% on that as well. I know it doesn't look like it. And that's the same with PayPal, right? You might say, well, hold on a moment, Dennis. How much does it need to go back up now? Well, our average price is around this level here. So actually, it only, even though it's fallen down around 70%, it only needs to go up around 20-30% for us to be break even, and then a little bit more for profits, which is easily done. So the most important thing to do is to always invest on those last entries. Don't leave it, don't wait. Always make sure you invest at last time and follow through. Very important. We're adding another entry on IPGP as well, down 57% now. It keeps falling, so we're adding another entry to that. The same on CRM. We've added another entry there on minus 39%. We did that last time. The same on Square or Block Inc. Also down to a 70% drop there. But we are adding one on Nike as well. So Nike fell quite a bit yesterday, a massive 5%, taking it down to a 30% drop. So we're getting in another time in Nike as well. That's NKE. That was a mouthful. And the last one we're adding now today, actually, in case, I mean, we're in quite a few, right? So you shouldn't maybe be in this many. We usually advocate, depending on your portfolio, that you have maybe between 5 and 6 different VCAs. And I think what's important, the more money you have, the more you can have, of course, but do make sure you also invest into different industries. So maybe not both PAS and AG, because they're both silver miners. Do one from each industry. So Goldman Sachs is interesting. And what would you say about that, Keith? Would you invest into Goldman Sachs, and why? Maybe more importantly.
So in regards to Goldman Sachs, the first thing to look at is with the investment, if we're seeing that the major indices and sectors are being bearish, so your tech sector, your pharmaceutical, then you need to find the hedge. Okay, yes, commodities is the hedge, but what other sector is actually going to grow in value as interest rates increase? And that is your financial sector. So we are looking at adding financial stocks now because we think they will really outperform a couple of other sectors, especially as interest rates are increasing, and they haven't had the same amount of growth as you have seen, for example, in tech and pharmaceuticals. So if we look at Goldman Sachs here, what I really like about Goldman Sachs, fundamentally, it's very, very strong. So we're seeing a good market cap. We've got positive income, a massively undervalued PEG. Okay, so a PEG of 0.445 is showing that the price does not represent the earnings and growth the company is having. So it's showing that the earnings and growth the company is having is a lot more than what the price is actually showing. So that shows us that potentially we might see, you know, the market have a bit more of a push up because it is classed as being undervalued. Now, if we have a look, yes, debt to equity, relatively large debt to equity, but the longer term debt to equity is getting better. So it's showing us that they are able to pay off their debt and lower the amount of debt that they have within the company. We are also seeing good earnings per share, so really good growth over this year and the next year, next 5 years. And one of my favorites is the return on assets, equity and investment. They're all positive. Now, I would like a bit higher, yes, but they are positive. So it is showing that they are able to generate money within themselves to grow the company and also their equity as well. So fundamentally, I think very strong. We're seeing a steady increase in regards to sales per year on year. So yeah, Dennis, I think it's a good investment. If you're not in a financial stock, then this one could be a stock which may outperform some of your stocks in your portfolio. Now, am I going to say it's going to outperform? We can't predict that. Okay, but from what we see,
speak for yourself, I would say it's not going to outperform any of my stocks.
Oh, well, let's see. We'll see. We'll have a little competition, Dennis. We'll have a little competition on this one. But I think in regards to the situation in America and the increase in interest rates, and if it is increasing quicker, then the financial sector may see a bit more of a boom. Okay, meaning it could be a quicker investment for us.
Yeah, absolutely. And it's all about being hedged. We were speaking about that as well. So speaking about being hedged, we're going to look at the results in a moment as well. But one thing I do just want to let you know about is that it is soon April, which means it's actually time for all our amazing UK citizens to invest in their ISAs and SIPs. So make sure you look over that. And we'll come out with more information about that for our amazing members as well. And but just to know, I think it's the 4th of April, you need to put the allowance in. So I think is you can put 20,000 tax-free into your ISA and a lot more in your SIP, which is your pension. So just a heads up for that as well. But let's jump into the results then. So this week we haven't really been milking the cow. I think the cow is a bit dry at the moment. We need to feed it more grass so it can grow. So we need to water, which means following the strategies, which we are, and the results will come. And so we're up a solid 55.5% on the total portfolio with the Buffalo VCA 875%, but that is on the money invested, right? So it's not on the portfolio itself. The same goes for CCA and small cap with stocks, where we're up 1,460%, small cap 4,320 on the money invested. So that being said, everyone, we really hope you enjoyed the trades of the week this week, and make sure you take action. And if you enjoy these videos, and of course you're going to be the first to know as soon as we changes our views on the market, but hey, we are always following the strategies. But if you do enjoy the content, press that like button, and more importantly, press the subscribe button as well, and the alarm bell, very important, so you get the notifications when we're posting our next video. And of course, me and Keith will have the competition now with Goldman Sachs. We're going to clarify the rules a bit so we can know who will win, and we will update you on that as well. So with that being said, everyone, enjoy your week, happy trading, and we look forward to seeing you in next trades of the week.